Happy
What is
September, everybody. Hey, Sammy,
Yeah.
go ahead. Sam, you started out off, buddy.
Yeah, what is going on, everybody? September the 5th, already past Labor Day, already getting through the first week in September. Time's moving quick, Chris. Time is moving quick.
It's coming, man. Seems like the older I get, we'll just start it this way. It seems like the older I get, the faster the days go. Samuel won't know anything about that yet. He's got time still left to think that he's got all the time in the world. But, I don't know. I don't know. Maybe it's because we stay more busy the older we get, or at least we should for a while. You got more responsibilities and whatnot. So it seems like things will just, like they just over and over real quick. And then when you get in markets, and you start looking toward, economic data coming out and whatever, you kind of, it seems like all the rest of it's a blur until you get to that. And then it's, the most important economic data event until the next one. Right. So, we've got a little bit coming up here. Yeah.
Well, I always hear, I'm in crypto, I'm in Bitcoin for a year. That's like 5 years in another realm, right? And you're a trader too. So It's even worse for you, right? Because you're constantly just time is your game, right?
Yeah, and that's something I always try to hopefully get people to understand. If they're thinking about trading or whatnot, which is that if you're trading, if you're day trading, whatnot, it can be a significant mental tax, emotional tax on you because you're constantly watching the shorter term charts, right? And if you're trading price action, I mean, generally you should be starting the 4 hour to find a significant area to trade in. Then you're jumping down to the 15-minute or the 5-minute. And there's a lot of noise. There's a lot of up and down in that. And, that will take it out on you a while. So we got these guys that come in here with crypto markets, which are open 24/7. And I keep trying to tell them, listen, guys, treat it like a job. Stop trying to trade it all day, all night, 7 days a week. You have to take a break, right? Anything you're doing in life, if you have a constant stress, a constant negative stress coming into you, you've got to take a break to recharge. So that way you can be more aware and more awake and more noticing what's going on when you're back at the job, right?
Well, Gary and I were just talking about that yesterday, I think, and maybe not in the same context, but we were talking about, when you're meditating or you're relaxing, right? Like relaxation does not necessarily mean you're just thinking about nothing, right? Relaxation or meditation can be, okay, what am I doing next? What's my next focus? Let me take everything in, as opposed to just constantly being fed information. You have to process it, right?
Yeah. And again, it becomes, for a lot of people that haven't been trading and they don't do it for a career, a lot of people say, okay, I'm a trader, but they have no, they're not a year of consistent profitability or anything like that, right? When I look at it, and a lot of people get offended by it, when they say, oh, I'm a trader, I say, okay, so you're consistently profitable then, right? Your equity curve just goes up, right? I mean, there's going to be pullbacks along the way. Because the reality is, if you're just feeding money into the market year after year, you're not trading. You're just throwing money away. You're trying to take on the actions of trading, but you're not actually trading just yet. And so you have to take time to process. You have to take time to get away from it because again, when you're looking at the charts all day, it's just constant. It's just constant charts. It's constant movement. It's constant data coming in. You're always you're dealing with this think of it like a film roll, right? That's going on, and it's just going, and you don't get a break from it. It's vitally important that you learn to take a break from it. And the only way that most people can do that is to say, treat it like a job. Say, I'm only going to trade on these days from this hour to this hour. Don't worry what happens after it. If you're a trader, it doesn't matter what happens after hours, after you're done trading. It only matters what happens while you're trading, because that's when you're in your position. So, just some basic things like that a lot of people kind of gloss over because they can trade 24/7. They have the access to do it, but they don't understand that other side of it that will often set them up. Because if you don't take that break, if you don't relax, what happens is you get really dulled by the constant stress. And so in trading, it's about noticing where there's an opportunity. And if your senses are dulled because you get all that stress that's compounded in your head there, you're going to miss the opportunities, or you're going to get overly emotional thinking there's an opportunity that really isn't. And that leads to a lot of losses. And again, with trading, the goal isn't. This is going to throw a lot of people off, but trading isn't about making money. It's about not losing it stupidly, I guess is the best way to say it, right? Trading is about the idea that you're going to lose money. There's no two ways about it. Nobody has ever been in trading that's ever not lost $1. It's not going to happen. So when you take it from that aspect and you understand that it is about the fact that you're going to be losing, that's guaranteed. You're going to be losing throughout time. Well, then risk management becomes most important. And so it becomes, how do I minimize my losses intelligently? Because I am going to have them at times. And then that way, when you do have your winners, because you will have your winners, the idea is that your winners will outpace your losers. And that just, and that's what makes your equity curve kind of go up there. So, a lot of it just comes down to, how do you treat yourself? How do you make sure that you are in the best state of mind, the best ability, the most awake, so that when you trade, you're trading effectively. And that goes across, and it's not just trading, guys. That's everything. Gary will tell you the same thing with business, right? Like Gary says, he likes to lay back for an hour or 30 minutes or something middle of the day to get that kind of focus and to get off all the mind-numbing continual thing, so that he can be more prepared as the rest of the day continues on. And I think it's really important that we do that.
Yeah, I think habits compound, right? I think it was Warren Buffett. One of my favorite things he said is, I just try to make one good decision a day.
Yeah.
Right. If I can make one good decision a day, I'm happy. And you're like, wow, that's actually, if you can just make one a day, 365 days a year, that's pretty damn good, right?
Yeah. Yeah. And I use the same thing. I say the same thing to our students. A lot of people, they come in and they're looking to trade constantly, right? They want to be in a position all the time. I said, just focus on finding the best trade of that day. Don't enter in just because there's a chance. Look for that situation that arises where you've got all these things, all these stars aligning for you, all these things happening at the same time that said this trade is more likely than not going to be correct. And if you do that, what happens is you don't take a lot of the bad trades that you normally take, which means you don't have to make up all that money. And the trade that you finally take is much more likely to be successful than not. And so if you focus on one good or two good trades a day, rather than just trying to be in and out all day long, as a trader, you're going to be so much further ahead. Again, and it's just time and compounding that takes care of, where you really want to get.
Well, let's talk about the jobs report, Chris. So it looks like it was when I was reading your text, it looks like we had a weak jobs report. But the counter was what? Unemployment claims were not as high as expected either. So job growth wasn't good, but people aren't getting laid off either. Is that the take?
Well, people aren't the initial jobless claims. So yeah, you could say, laid off or whatever, but it's also people that maybe have been sitting out and they haven't necessarily applied for the jobless claims. They're I can't think of the word, but yeah, the benefits.
Underemployed? Oh, okay. Yeah, they're not getting welfare or unemployment benefits.
Yeah. Some people, they pull off and they don't do that, right? Other people, the minute they do it, they're right there, popping at it. But yeah, so ADP report came out today. They were looking for 145,000 jobs growth. They got 99,000. So, it's quite significant less. But again, the counter being that the initial jobless claims, again, which have been consistently lower than what they've been expecting, again, was lower by another 3,000 or 5,000 than what was expected. So, it kind of mixed jobs today. We've got the NFP tomorrow. Joe Calasari, I think, is probably the best one. When he talks about it, says basically, it's NFP is a lot of garbage data because of the way in which the BLS goes about obtaining that information.
What are those terms, NFP and BLS?
Yeah, so the BLS is the Bureau of Labor, and then they put out the non-farm payrolls report, which is the NFP report, which comes out first Friday of the month, so tomorrow. That was the one that last month, was right there the weekend before we had the yen carry trade implosion or whatever you want to call that. That was limited in duration to just an overnight thing. But that was the one where we had, and they came in at this. We came in with worse unemployment than what we'd expected. We popped up from, what it was like 4% or 4.1 to 4.3%, which again, let me remind everybody is for historical purposes, it's this 4 to 4.5% has basically been considered full employment. So, again, I have a hard time jumping on the, everything's so awful bandwagon when all we're doing really is going from a superheated job market to something more normalized. Now, that's also part of what the Fed's doing, right? So when the Fed raises that interest rate, as they did, the Fed funds rate going up there, what they're trying to do is you're trying to cool the economy. Well, the way you do that is, you've got to bring unemployment up a little bit. You got to get people out of the market because that way there's less money to be spent out there. That's one of the things they do, right? So I think the best way to look at what's going on with the jobs market right now is more a normalization, historical normalization versus this huge, terrible thing that's going on at the moment. We'll see how it plays out overall, but right now, I think that's absolutely the way you have to look at it.
I heard on a podcast yesterday morning, someone was being bearish because banks are paying off their loans. And they were saying the fact that banks are not positive about the future because they're trying to pay off their loans and their debts now is a bad signal. Do you agree with that? Does that mean anything to you, or is that just noise?
I mean, depending on the context, if you're thinking a recession's coming in, then that makes a lot of sense. I think, bank reserves, because of the tightening that the Fed did for so long here over the last few years, I think bank reserves are dangerous levels, basically for banks. They need more in terms of reserves coming in. So, I think there's more to it than just that. But I think definitely if you're looking for a reason to be bearish. Again, I'm a big fan of this idea that in life, whatever you look for, you're bound to find. That doesn't mean it's correct. It just means that, if you're looking for something to say this thing, you're going to find a way to find some data or some information that says, yeah, that's probably what's going on. So initially, I mean, I could see that, especially if you believe the recession's coming in. But outside of that, it may be more due to tightening conditions, everything else that went on, which brought the bank reserves pretty low coming into, out of the pandemic and whatnot.
It's very interesting because I think I've realized over the past 3 months that a lot of the economists that I follow are what you would call bearish biased people. And, I think a lot of them are really smart, and they talk about things that I don't hear a lot of people talk about. But I'm starting to realize there's almost like these two camps of thought that have nothing to do with economics. But to your point, it's like people looking for positives and people looking for negatives, and that's their focus.
Yeah.
And you can always do both no matter what the market is. Right. And so I find that very interesting now, because now I'm starting to frame people as, okay, so you've always been bearish. You've been bearish for the past 3 years. And that doesn't make them wrong in some of their data that they're looking at, but it just it means that's what they're looking for and hoping to happen. That doesn't mean that a crash is going to come, or that, hey, we are in a time of great economic growth. It's just like, depending on where you fall on that angle, it just opened like a new perspective, because now I'm thinking, okay, how much does the economic theory matter? I should be looking at some of the perspectives of just, like this guy's been talking about, a recession for the past 5 years. He still says things that I think are really smart and cool, but has that happened? So it's like, it's some nuance that I'm starting to learn and kind of like judge some of these economists by now.
Yeah, and that's a great point there, because one thing that I noticed, so, I've got a couple of master's degrees and I've got a law degree. And I only say that because the one thing I noticed is when people, you're supposed to use the scientific method when you're writing these papers, right? You're writing these theses and all this kind of stuff, and you're getting published, right? But the problem is, it's not that necessarily that the data that they provide in their experiments or whatever were wrong. It's the way in which they phrase the question, right? So the question is supposed to be, neutral, and your data either proves or disproves whatever the position is, right? But, as human beings, we are naturally going to have a bias to whatever information. And so when you look at these papers that have been written, you can often tell the bias by the way in which the question is framed. And so that's kind of the same thing that we see here, right? If you're thinking that there should be a recession, then the way in which you frame the data that you're looking at is always going to be to the point that, again, you find what you're looking for. And if you don't find what you're looking for, you look at other data until you find what you're looking for, right? But, again, the biggest thing about, economics is that it's not a solid, if this happens, then that happens thing. And so, when they're going through it, it can get kind of it can be quite an issue. If you're not aware of what that bias may be and what's going on, which is why when I trade and I'm using tools like Elliott Wave analysis, for example, Elliott Wave lets you know, listen, if you do this, then you're wrong. Your count is wrong. What you think is going on is wrong, plain and simple. Now you can go back in there and try and count it and make it fit, but you try to play to the most likely, kind of the most average, the most neutral kind of look at that count. And then you work with that. And if it comes out as, oh my gosh, well, it's not what I think it is, then you got to go back in there and count and go, okay, well then what is it going to the other direction? What are we potentially looking at? And so it just kind of helps you, if you're aware of it, really kind of keep out a lot of the bias that you're going to have when you're kind of looking at the charts and what's going on.
So are the bears winning though? Because we talked this morning, right? You said the crypto fear index?
Yeah.
Is high. You didn't say all-time high, did you? It's just high.
No, it's really high. It's like around 23.
So people are expecting a dump? Is that what I'm following?
Well, people are scared. They're nervous, is what it is. And so, it's just kind of like this thing that says, well, this is where people are currently sitting right now. They could be expecting a dump. Yes, they're not. If they're not bullish, they're not expecting price to rally higher.
Because you're never nervous the price is going to go up, right?
Right. I mean, now you can be exuberant and euphoric and excited and thinking price is going to go up, which will get you toward that greed side. But right now they're feeling like, no, like it can't possibly go up. When you're getting down here in those low 20s, that's it, like that extreme deep kind of fear. And at that point, people have basically, for the most part, given up. They're fearful that they believe that there's no way price can continue to go up from here. It's got to go down. And now you start getting the big targets to the downside. The interesting thing about that is at that point is usually when you're starting to find a bottom, right? Because price doesn't rally on excitement. When you're looking at the overall trends, price tends to start to rally when everybody's given up on it. Right. And then and then they kind of see it and they see it bounce a bit. They go, oh, it's a dead cat bounce, all these things. Just like price doesn't top out on bad news. Price tops out on exuberance and over exuberance and excitement. And oh my God, this thing can't possibly go down. Kind of what we were seeing there as we got to the all-time high, and we were looking at potentially some moves higher. Do we just pull back a little bit and then pop out and run? Or whatever, people were very excited at the time. We were extreme kind of greed area, but here we are pulled back, and people are quite the opposite right now. So for me, when I'm looking at sentiment, it isn't necessarily that I look at that particular indicator, but it is another one of those things that goes on there and says, well, people are feeling pretty down. They're not feeling positive about it. They don't have a lot of hope for it. There's a lot of disinterest, right? I think it was the network network activity is down to levels not seen since 2021. So it's down to, 3-year lows. And basically that just shows disinterest. So you have disinterest. People are like, well, hell, there's nothing going on here, or it's going to go lower. I'm not interested, right? I'm going to go do something else. And then the people that are here, that are still in here, are still very scared, very worried. And so those two things kind of together, almost brew this perfect storm of, it doesn't mean we rally today, but we start watching now. We start looking at going, well, hell, people are, really at this point that we kind of look for at those lows, and we look to see, okay, are we going to get this kind of bottoming in price action formation happening locally?
Well, we got 4 weeks of September, right? And not your prediction, but one statement you've made is, hey, this could be a good September,
Potentially,
right?
yeah.
So
Yeah.
are you still seeing that? Or you still think like, hey, if this is the bottom at the beginning of September, we got plenty of time to then bounce?
Yeah, that's what I like when I'm looking at charts and we're looking at like the daily. RSI is oversold or nearly so on most charts that we're looking at. A lot of charts that we're looking at. Stoke RSI, the other one that I look at, indicator is also oversold. We look at weeklies. Weeklies are looking pretty close to potentially, maybe making a reversal on that with those same indicators. So when I'm looking at that, yeah, it's this possibility that maybe, the beginning of the month, we hit our lows for the month and then we go up. But, again, here's the thing. Our low is around 49,000. So we could still have a down month, down from the open of the month. And so we could still have a negative September, but not actually make a new low either. And I would be just as fine with that as well. But, again, as I continue to talk about, my thought is, as far as Elliott Wave goes, we have a 38.2 pullback, 38.2% of wave 3, which is our initial fourth wave target all the time. But if we lose that, it still means we're probably in a fourth wave. And we usually look, our next target is the 50% retracement, which puts us right there around 42.8, 43,000, depending on what chart you're looking at. And so, while everybody else would be freaking out, oh my God, it's the end of the world going down here. For me, it's like, well, no, as far as the bigger macro count goes, it's exactly what was possible at this time. So, no concern for me if we were to do that. But you would definitely see people really freaking out if that were to happen, and probably see calls going well below 20 even at that point. People would jump in with the idea that the cycle top is in and whatnot.
And I know we jumped straight into crypto, but do you have any thoughts on NVIDIA and some of the other stocks that we were talking about earlier?
Yeah, man. So, tech looking decent out the gates this morning. Tesla at one point was up 6%. Tesla the last few days has been a great rally off the daily pivot. We saw Amazon up almost 2.83% this morning as well. We saw even Meta was up something like 0.7 or 0.8% this morning. NVIDIA was up a couple of percent, 2.5%, something like that this morning as well. And so yesterday was interesting. Yesterday, NVIDIA had a little bit of a pullback and rallied up into the daily pivot and then pulled back again, left this large upper wick on the daily candle. And so what I told my students was, listen, we're looking for this pullback here. We may be done. That could have just opened the path to, taking out a lot of the cells that were sitting right there above it to open up the path to rally higher. And so this morning, NVIDIA started rallying a bit. So we'll see if we can get it. If we can get a daily close above that daily pivot, where is that at? Let me see here real quick. It's right there around $113, $114. If we can get a nice daily close above that, to me, that would suggest very well that NVIDIA very well might be done with the pullback and head up larger there. It's stochastic RSI is bottomed out and oversold right now. RSI, not quite oversold, but nearing it. But, we could see further downside, maybe even $98 or so before we get a potential rally. So I'm just kind of interested to see what happens in this area we're at right now. Do we rally from where we are and break out above that daily pivot, in which case things will be looking pretty sweet for NVIDIA? Or do we pull back a bit more and then get the breakout there? But that has to happen. We need to get that breakout to kind of suggest, okay, this may have just been a pullback and we're potentially heading up to new all-time highs with NVIDIA. So until that happens, we could still break down, even below, what is it? It's the August 5th swing low. Yeah. So even below that. So, again, trading, a lot of it is waiting for the setup, right? It's waiting for a little bit of confirmation, not jumping in, trying to catch knives, because that's going to get you cut to pieces. So that's what we're kind of waiting for. Apple, let me tell you, Apple was looking really good as well, by the way, real quick. It's pulled back a bit now, but man, oh man, we had a good run starting off the beginning of the day there.
Well, the new iPhone, doesn't Apple always rally right before their new iPhone comes out? Isn't that coming out in September?
Yeah, usually you'll get some kind of push up there around when they have their new stuff that they're releasing. In kind of anticipation, buy the rumor, sell the news kind of thing. Usually, yeah.
Chris, what about oil and nat gas? I know they were talking about adding some crude oil. They've now pulled that back. Crude oil moved a little bit up. It's weak, right?
Yeah, yeah. So, you and I have been talking oil for, months and months and months here. And I was telling you, looking at the charts, there was the possibility we could see some real movement into 100 plus, but we need to get through some levels. We did not get through those levels. If we're zooming out to the weekly chart, it's looking a lot like the DXY right now.
Can you pull those two up? Can you pull the DXY and the crude chart up? Because I think this is a macro picture that's worth looking at.
Yeah.
While you're pulling that up, see, my thesis is that we have already we've hit peak demand some time ago. Like there isn't any more demand now. It's a reallocation of assets, right? Where are you going to invest money? And I saw the comments. People are all positive. Hey, I'm buying here. The longer this lasts, man, this is painful for people, right? It does influence people. They start to look at other options saying, well, maybe I should get into the tech space or go the MAGA route. Maybe, you start just looking at all these things. And the longer it goes on, your thesis, even though you have so many people coming into Bitcoin, it's performing as if it's like, for me, it's performing as if the future is really unknown.
Yeah.
Right. Like there's just so much unknowing in the marketplace. And it's pretty polarized too, right? It's either 180 or it's zero. And it just seems to be extremes right now, which means that someone's going to be really disappointed when the party ends.
Yeah. No, that's great to recognize there because, we do have that extreme polarization, which usually kind of gives you a bit of volatility coming in there. But here's the oil chart. So if we're looking at this, right, we have actually got this peak and this pullback here. We've got this breakdown through this support. And, it's possible this could be an A, a B, and having a C. And if we're looking at about, mid 40s would be that initial kind of target that I would look for. Around here, we usually look around the 100 to the 123.6. So in this case, potentially $39 to $46 as kind of that target area on the way down. And that target area actually is, we had this crazy, this negative first time ever negative close down here. This is the weekly chart, but on the daily there, for contracts when we were down negative 40 at one point. And so we had the rally up off that. This is the real first. That was
COVID, right?
Yeah. That was after COVID there.
That's when I filled a Range Rover up, my Range Rover from empty for $36 during that period. And I'm like, I took a picture of it. I'm like, I'll never do this again. Right.
Never again. Yeah, no, absolutely crazy. First time, we've ever had that. And it was just, everything shut down. So, the airlines weren't buying oil.
Chris, let me ask you a question because I have believed that we're not going to see $100 crude oil probably in my lifetime for any long period of time. Long period being 60 days or longer. Crude oil is not going to live at $100. They're going to bring all the oil on the planet at $100. Average cost is around 55, 60 global supply of oil. At $50 oil, I think that's really good for the economy. Doesn't everything scream if we have the largest input oil to everything, including food, transportation of food, transportation of everything? I would think a $60 to $70 print would be, or $60, $40 print would be healthy for the economy. Am I wrong?
Yeah, as far as, input costs, because, for people that don't understand, petroleum is a huge byproduct that is used in plastics. So it's not just, oil for fuel and whatever for transport. It's going to be for things, the everyday things that we use. It's included in everything. So, your input costs then are going to be, lowered, which, makes the cost of your goods lower, right? The problem is, how do we drill here in the U.S.? How do we drill $50 oil, right? Because we became the largest producer and exporter of oil in the world precisely because we were doing horizontal drilling, because we were doing fracking. These things are expensive, right? It's not just simply dropping a hole in the ground as we've always done. And so it's a lot more expensive, to frack, to do some horizontal drilling, which, so that, that kind of begs the question, how do we keep it that low if we can't afford to produce it that low, right?
Yeah, but
that's
I
kind of where
think
I sit at with that.
yeah, but that can be a little misleading, right? I mean, there's no guarantee that a producer gets a 30% return.
Right.
Okay, they can drill this shit for $45 a barrel all day long, and you have not heard of a dry well or dry hole. You haven't heard of the word dry hole, and I mean, a gynecologist is the only place in the last 10 years you've talked about a dry hole. Sorry, but like, it's all science now. It's perfect. They know exactly the deliverability they're going to drill into. They know the capital cost. Is it capital intensive? Yes.
Yeah.
But all this innovation showed up at $30 crude. It did not show up at $100 crude.
Right.
Innovation shows up under price pressure.
Yeah.
And people get to decide, oh, I'm going to do this. I'm going to just do it better. I'm an engineer. I have no other job. I'm going to figure out how to drill $30 crude oil. I think Saudi has a $65 break even. That's probably high. And Americans have a 45-ish break even crude price. For them to make $10 on a $45 barrel, I think that's a great return, man. For no risk.
Well, and here's the other big thing, right? So, when oil rallies up to, $80, $90, $100, wildcatters everywhere, right? Mom and pops are out there doing their thing. When you're getting $60 oil, you're getting $50 oil. The only people drilling are the big companies. You got Baker Hughes and whatnot out there. And even at that, you're still going to see, their, oh my gosh, what do you call it? The numbers are going to be dropping off for their active, whatever they're trying to get out there.
Oh, their decline rate, on the production.
Yeah. So, I mean, the only people that are going to be able to do it at those levels are definitely going to be, your big players. I definitely don't see mom and dad, wildcatters out there kind of doing that at $100. I mean, people don't understand it at $90, $100 or more a barrel. You can drop holes all day long. You just need a hole or two to really kind of do it. But again, it's Texas out here. We're kind of all raised on all that kind of stuff that's going on. The rig count is what I was talking about earlier, by the way. You're going to still, even at $50 or whatever oil, you're still going to see even Baker Hughes rig counts are still going to drop.
But rig count is a variable that, like, I don't even think it's a valid number anymore, because it used to be one hole in the ground per rig. Now it's 12.
Yeah.
So the production goes up. I mean, everything has changed. It's not, the rig count to me is a really false piece of data. I'm not disagreeing with you. I mean, it's relevant, but you have to go, oh yeah, but I can drill 6 times into that well bore or that platform. So cuts capital costs, cuts everything, right?
Yeah. Again, I think, like you said, I think it's this idea that if we're going to have an extended period of low oil prices, it's going to force the, for them to get in there and figure out how do we do it for cheaper, because that's the only way you do it, right? I mean, that's the only way you do it. The only reason we became, this large exporter of oil and whatnot that we were, through their, through 2015 into 2020 and whatnot, was because money was cheap. Private equity was just tossing money left and right, at the oil drilling. So, it was cash flush, even though it was really expensive, to drill and to frack, and to do some horizontal drilling. But, again, when we look at this weekly chart, it suggests that there's a good chance we can see that move down there toward that $40 area. And that is really, really cheap oil. And it wouldn't be, and if we did that, it would take a while to get there, and it wouldn't be a quick push back out of it. It wouldn't be, something, I don't believe anything as quick as something like this coming back out of it. It would be more, along these lines, kind of coming back out of it to head back up. So we're talking, years and years.
Can you extend that chart out to the 90s? And let's just look at, hey, this is the life of crude oil over a really long period of time.
Yeah, there's the
I would say that average is somewhere in the $35 to $40 band, right?
Yeah, right about the same kind of area we'd be looking at. Yeah, it gives us this previous resistance support level here. I mean, it's the perfect target area if we're going to break down.
Dude, this is very healthy for the economy. You get crude oil down to $57. You cannot tell me that's not healthy for the economy. Everyone's going to win there. The utility companies continue to make a margin. The oil companies continue to make a healthy margin. Europe just saved, 15% on the energy bill. They're broke. I don't know how that would be. This is a very healthy. I would think this would be very healthy for the macro economy. Gasoline prices will drop. Natural gas will drop. Manufacturing costs will come down. Consumers' prices for energy will come down. The people in the UK are like freaking out. Their bills have increased 40%. Can you build a case where this is a negative?
Again, it's only if it coincides with the recession, right? I think a lot of what people get wrong with is they look at economic indicators, or they look, for instance, at the price of oil to kind of tell them if a recession is coming, where in reality the recession is already there, and these are responses to it, right? So, I think the only way we really kind of get negative with that is if, just in the grand scheme of things, is if we're already in a recession, and then prices coming down, and and that price coming down would be a reaction to that recession. But other price, anywhere we look, lower prices are always good, right? Lower prices allow us to have more money to spend. It just makes life easier. When things are lower cost. The only real people that it hurts, unfortunately, are the businesses that are in that particular industry, whatever it happens to be. So again, if we're getting $40 oil, $50 oil for a while, it is what it is. Your big players that have their scales of economy and whatnot, they're going to be the ones that are going to benefit from it. If you're a smaller player, you're likely to get pushed out. Same thing with Bitcoin mining, right? We get to the halving, what you're making, comes down to less. And so if you're a smaller player, you go out of business, you get bought up, you get whatever, you get sucked in with somebody else. But, effectively, you yourself are going out of business, and, because you couldn't compete at that level needed for the prices that you were getting there. So, yeah. Again, I'd be a big fan of it. But people will generally say, hey, if oil prices are going down, there's a lack of activity, a lack of demand, and that's why it's going down, which means companies are going to shut down, which means people are going to lose jobs, which means less money to be spent, and kind of just do that whole.
Yeah. Chris, I hear all that, but $120 crude oil, is that good for the market?
No, 120.
If 120 isn't good for the market, then 50, 57 has to be positive.
Yeah.
I don't like the oil companies will be fine at that price. They'll increase their volume.
Yeah.
They will, in fact, trim their business to be more efficient. They'll get rid of their fat. Exactly what every administration, whoever wins this election, has to go in and trim a lot of fat. Okay. It's not a little bit, it's massive. So the problem with governments is there's no price points to correct behavior. That's what price is about. People forget this price movement is trying to change your behavior. It's determining how convicted you are. When you're in a marriage I like to use analogies that are, some people think some of them are a little crude, but for me, it's how quickly can you paint a picture to someone? If you have to use a meme or a analogy or a picture that's a little rude to get somebody's attention, I think it's a good teaching methodology. I just, when you have no metrics that show that you're making mistakes, you never fix anything.
Right.
And I think at $57, the marriage part, the first time you hit a problem with your partner, if you're not able to deal with it, that problem's not going away. It's just going to continue, right? So if I have a problem, let's say Sam and I have a challenge, and as long as I communicate about it and go, hey man, look, that's a problem, he then gets to decide whether he changes his behavior or not. And that's the value of these commodity markets. It really makes you change behavior. I saw all companies at $30 doing stuff that was like, wow, you guys are into survival, dude. Right? Because you literally go into shit. We have to go into, you have a board and advisors going, this shit. Oh, by the way, you have 5 competitors all doing the same thing too. So you can't just, when you're trading by yourself, you can sit there and go, well, this is my book. But when you're ExxonMobil and Conoco, Mobil, BP, and Shell all do something, and they're all talking to the same advisors, this is what drives these markets into these big moves, because everybody does the same thing. Yeah. And it's very difficult. I do not believe this bullshit about crude oil needs to be at $100 to show the world economy's good. In fact, natural gas is at $2. It has done nothing but go to zero. And I think crude oil goes to zero. Like,
that's a big bet.
Everything in dollars should decline next to zero, man. Like this is what happens. Technology should deliver more energy on this planet. And as the price goes up, we begin to control our consumption. That's what I love about commodity prices. I maintain energy is too cheap in America for certain, because no one turns anything. I guarantee you, Sam's room that he's sitting in, I'm going to go in there tonight and there's shit all over it. It's lit up like a fucking Christmas tree. Right now, if he had to pay the bill, if I could measure, imagine, hey, Sam, by the way, here's your pay, and you use 32 units of electricity. Like, you use more electricity than I did, dude. Like, I'm a pound your ass. Well, he would then start turning stuff off.
Yeah.
And if you think about, if every human being started turning stuff off, we are massively wasteful. There's enough energy to go around forever, in my opinion, because we waste so much, dude.
Yeah.
Like, the waste is staggering. Okay.
Yep.
I mean, just to go down to the store to grab a pack of cigarettes, like, oh, is gasoline priced correctly? If the people in Europe walk, why? Because they can't afford the car, they can't afford the gasoline, and they $11 a gallon, and they can't afford the parking. So they're like, okay, I'm gonna walk down to the shop, which creates a job for a little village shopkeeper, right? So it really kind of feeds on itself if things are priced correctly. And I think things are very rarely priced correctly. Do you agree with that?
Yeah, no, I absolutely agree with it. Prices, prices constantly evolving, right? Because we constantly have people, coming in and out of the market. And, I continue to maintain that the absolute best way we understand how people are feeling is about whatever particular thing we're feeling is are they spending money with it? That's the first part. But then the second part becomes, well, are prices maybe artificially pushed in the wrong direction? If prices are artificially pushed lower, then you're going to have, more people jumping out just because they can, especially when you're talking about stuff like maybe electricity or stuff that we use. But, my first point of contact is always, well, are people spending money on it? And it's the easiest way for people to kind of denote how do they feel, generally. Now, you're going to have some groups that are going to complain that life is really tough, and it is for them, right? Whether it's by, decisions they're making every day, or whether it's just by their overall socioeconomic status at that point, right? Tough is tough. But at the same time, you're going to have people in a different area, again, whether it be by socioeconomic status or just by a different choices being made where things are okay. And you have other people where, again, by those same things are great, right? And so I'm always really quick to point out when people are saying, well, things are really bad here and there and whatnot. I said, well, you got to step back and look at where are you in relation to that? Is it just tough for you? And if it's just tough for you, is it because of where you are socioeconomically? It doesn't mean it's not valid. I mean, that's true. That's validity right there. Now, is it you because you're making bad choices? Do you have 3 cars when you're one person? Do you have a 5,000 square foot or 3,000 square foot home when you only really need a 1,500 square foot home? Are you living in a gated community when you could be living, just outside, the suburbs where you don't have all that extra taxes and everything else on there, right? These are decisions we make that kind of may put us into a bad situation as well. But at the end of the day, we look at it as a whole. Is there money coming in or is there money going out? Is the money coming in less, and how significantly less, or is the money coming in more? And when we look at that, that gives us a better feel of the overall economy. How's the overall economy doing versus, just what we think it should be based on either our personal, level of wealth or financial situation, or, that combined with what we believe the economic indicator should be saying.
Yeah. Well, thank you for that. I mean, I'd like to look at, maybe we can spend some time on crude and nat gas on another show, because I think it's to me, they're the bellwether canaries in the coal mine that really tell you what's happening. I mean, then you can go to the luxury watch market. All the luxury markets are rolling over.
Yep.
Which, when I say rolling over, I think they've just met peak demand, and there's just not much more to sell at the very top end of the market. So what happens? The market starts to get soft because you have less demand.
Yeah.
It doesn't mean the market's going to completely melt away. A Rolex watch that has good value is probably going to hold its value over a long, long period of time. But hell, man, all these markets have been moving for 8 years.
Yeah.
They've been like on a rocket ride. Yeah. Little adjustment here is like not stupid. Now on the Bitcoin front, one of the things I wanted to get to, we can move to that, I think, but I wanted to show a little 1 minute or 2 minute little video Sam's got that I sent him this morning from I don't actually know who it is, Sam, but I think this is one of the issues that we have this we have a lot of things being pushed in the market that are trying to control supply and demand. Some of this is political. By political, I mean decisions, legal decisions, political decisions that have been made over years and years and years that have created this flywheel effect that we can't get out of. Okay. Imagine people talk to me. They're like, hey, I feel like I'm on a hamster wheel. And it's like, yeah, you can't get out of gravity. I was with Grant the other day and I said, bro, and I made this comment. I said, look, I think if you're not making $500,000 a year as a family, it is difficult for you to get out of the gravity of all the insanity of the prior 50 years, the decisions that have been made. And he made this, hey, that's fucking ridiculous. There's nobody on here that makes $500,000. It's a bridge too far, And I'm like, well, you're just responding because you told somebody that if they don't make 400 grand, they're idiots. I didn't say that. What I said was, if you don't make 500 grand as a family, I would be spending time figuring out how to get there, because in order for someone to save, meaning invest, because there is no savings. If you're saving money, I read a stat the other day, 82% of the women, by the way, women control money in the house.
Yep.
However, women put money in banks and leave it there. They don't invest money, dude. They leave it in the bank and they think it's invested, but it's being destroyed. It's literally, you're leaving $1,000 in the bank. The bank then takes 9,000. They get to do 9x what you left them. And they loan the money to me, Chris, and Sam, and we go out and build businesses. So we take your money, You're making 4.5% on it, which is not keeping up with inflation. I borrow the money at 7%, 9 times. Okay, so the bank's making a shitload of money. They're paying you 4, and they're getting, probably 7 times 9. They're getting 56, and you're getting 4. Pretty cool trade, right? 56 to 4. You do that all day long, dude.
Yep.
But while Betty's leaving the money in the bank so that she can look at her account every month and go, oh, look at me, I have $10,000 in the bank. Yeah, dude, big deal. You have more money in the bank than I do. I mean, I just had an overdraft call. Hey, Gary, one of your accounts is low. Oh, well, that's awesome. Cool, dude. There's not too much money in the bank. It's my money's working for me.
Yeah.
Anyway, Sam, maybe play this, because I think this is part of the phenomena that we're all trying to push up against, and it's a bit of a matrix. I think that if we're Kevin, what's his name, the Matrix guy? If we were him, it'd be cool, but I don't.
Keanu Reeves.
Yeah, Keanu Reeves. Yeah, check this out though. This is a good video, guys. 2 minutes long.
Make sure you can hear it when I play. Let me know if you can't.
Oh yeah, okay.
My opinion that you do not really understand the concept of banking. All the banks are broke. Bank Santander, Deutsche Bank, Royal Bank of Scotland, they're all broke. And why are they broke? It isn't an act of God. It isn't some sort of tsunami. They're broke because we have a system called fractional reserve banking, which means that banks can lend money that they don't actually have. It's a criminal scandal, and it's been going on for too long. To add to that problem, you have moral hazard, a very significant moral hazard from the political sphere. And most of the problem starts in politics and central banks, which are part of the same political system. We have counterfeiting, sometimes called quantitative easing, but counterfeiting by any other name. The artificial printing of money, which if any ordinary person did, they'd go to prison for a very long time. And yet governments and central banks do it all the time. Central banks repress the amount of interest that rates are, so we don't have the real cost of money. And yet we blame the real retail banks for manipulating LIBOR. The sheer effrontery of this is quite astonishing. It's central banks that manipulate interest rates, Commissioner. And plus, underneath all this, we talk loosely in a rather cavalier fashion, do we not, about deposit guarantees. So when banks go broke through their own incompetence and chicanery, the taxpayer picks up the tab. It's theft from the taxpayer. And until we start sending bankers, and I include central bankers and politicians, to prison for this outrage, it will continue.
Bang, bang, dude. That's just in your face, right? I don't know when that was, but I noticed somebody said, hey, when they speak in such a nice British language, accent, it all sounds differently. That guy's being very aggressive, though. Like, I spent a lot of time in England. That's a very aggressive language for them, although it sounds really proper. He is smashing the system right now, saying it's bullshit, dude. Absolute bullshit. And this is the problem we're into. It's there's no clarity on how much money there is out there. There's no clarity on which central banks are printing and not printing. We have, what's his name, Powell, who literally thinks he's in control of something. I don't think they're in control of anything. Like, it's a joke that they're having a meeting, man. Like, what are you meeting for, dude? You have lost total control of this market. Why don't you guys all just decide when you're going to release the Kraken, which is print the shit out of this stuff, dude. And they're going to go direct, man. They learned their lesson from COVID, right? I think and I know everybody's going to go CBDCs and all that, whatever. The CBDCs are most certainly coming. Basic income's coming, right? They're going to try to socially engineer this planet for us all to live under one authority. And sadly, they fucked it up the last 10 years. They've irritated so many of the alliances. I don't even see how they put this thing back in the bottle. It's so messed up. So I like it for me, man, this just builds the case for Bitcoin so well, right? And like when you really think through it, there's no solution from the old system. You need something new, right? And it just so happens that Bitcoin showed up on time. It had spent 15 years incubating, sitting in that oven at 50 degrees, man, just cooking, getting rid of some of the players, right? Okay, now I'm still convinced not much money was made and retained from that space. And this industry was built on pixie sticks. And now it's actually got real infrastructure being put into it, real players, man. And y'all can say, well, they're evil. These are monster titans of industry, man. Like you want people that are swinging big weight around, $1 billion in Bitcoin. If we don't have that, it's not a real market, okay? Right. I mean, you look at the crude oil market, how much crude oil trades every day? It's in the fucking many billions of dollars every day, with credit exposure all opened up, credit lines, ISDA agreements, contracts that are stable. You don't have different contracts in Iraq than you do in the U.S. You have one basic crude oil delivery platform, and that's what everyone expects you to do. If Bitcoin's not a monster play here, with the infrastructure, the situation we have built over the last 30 years, it's hard for me to imagine Bitcoin doesn't have a monster role here to fill in all the little gaps, all the problems. Now, whether it's worth $2 million a coin or $50,000 a coin, most certainly for me, it is much bigger than a $1 trillion opportunity. And that tells me the price of Bitcoin as an industry is not correct. And this is really important because Chris and I, when we grew up in the markets, we were pitched that markets are efficient. Yeah. And I got to tell you, I have never seen a fucking efficient market. Nope. Ever in my entire life, I have never seen an efficient market, ever. And it's just a lie that they're efficient. I have no idea what NVIDIA is worth today, but it's probably not worth the exact print it's giving. Like it's worth something different than that. And we're all kind of guessing, right? We're placing value on things in the future, by the way. All these prices are assuming the future. They don't assume what's the, right, Chris, you know what I'm saying?
Yeah.
They have a future value cooked into it.
Yeah. Otherwise, why get involved with it? Yeah. You got to have some idea of whatever you think that future value is going to be.
Yeah. What did you think about what this cat said? I mean, do you see this as if he was talking to global parliament, let's just pretend like we had the global parliament. We had 12 people that ran the world. They were 12 good people. And imagine that conversation going on with those 12 people over the whole world, because that is in reality. You're hearing the British say that conversation could be held in any kingdom on planet Earth.
Yeah.
Right?
Yeah.
China, it could be held in Europe. It could be held here. There is literally no different to the game. The people are a little different.
Yeah. It's a product really of the type of economies that we have, right? We're all debt-based economies. I've talked about this before. Debt-based economies, mean that you're borrowing money. And if you're borrowing money, then the goal is to pay with cheaper fiat in the future. And how do you do that? Well, you get inflation, right? How do you do that? You print more money, but it's not just printing money. Again, there's two ways to increase liquidity. One is, for the Fed instance, if you're in the U.S., the Fed to print money. The other way is to lower interest rates, which increases credit, which is what he's talking about, this fractional reserve banking. And so, I definitely agree with what he's saying. Now, that doesn't mean things crash tomorrow. I think people sometimes get really, when they finally start listening, they go, oh my God, they get freaked out. They should, because it's not a great system, but it's a very deep system. It's a very global system. And so the idea that it would crash tomorrow, isn't there, but you need to understand that, this is something that likely is not going to be able to last forever.
Yeah, but I mean, I can build the case actually, because you say, hey, we have an economy based on debt. We have an economy based on debt because we have a world that believes in ownership.
Okay.
But they don't believe in efficiency. Now, I think we had to sell whole cars to people in the 80s because there was no way to make things divisible. The future, what if the future is that you and I and our children and Sam aren't ashamed of renting things? We're not ashamed of not having debt that we call ownership.
Mm-hmm.
That we're buying things and taking on long-term liabilities and obligations to stuff we should never take obligations to. He should rent and lease everything as he uses it. Now, some people will say, oh, you own nothing. You own nothing right now anyway, my friend. Okay, the bank owns this shit.
Yeah.
You owe a debt. That's all you own is a piece of paper. It's already a derivative. So this real world asset comment, even that word, in my opinion, is, oh, wow, you guys are belittling crypto. By using the real world asset term, you're saying all the stuff we used to do was real world. All the stuff we used to do was bullshit. It's Sam does not own that car he drives. He has an obligation to pay the debt. If he could have afforded the car, he would have paid cash for the fucking thing.
Yeah.
And he didn't because he didn't have the cash or he wanted to do something different with it. Either way, he didn't have the cash to pay for the car. So maybe he should be the Uber guy. And if we just Ubered everywhere, dude, I don't think I shouldn't own a home. I shouldn't own two cars, right? I mean, it's wasteful. The cars sit in the 44% of the time they're on the road. Yeah. 96% underutilization on something that cost $80,000 or $1,000 a month for 6 years before you pay insurance.
Yeah.
2 of them. And you got to have a new one every 3 years because you're embarrassed because the neighbor's got one. And nobody owns anything. So my point is, if we had a very different world, which if we would have woken up in 1800 and we would have had the ability to do divisibility and we had metrics where you could measure, hey, I'm going to send Gary $2 because he did a good job on Thursday. Is that not a better, I think these people, instead of taking loans out for colleges and wasting 4 years of their life, they should hire guys like you for $100 a month or me and go, you're my teacher, dude. And you're in a room with 1,000 other like-minded people, all paying $100 a quarter. It's a good business for me, and it's an awesome business for them. But they're renting, right? They're leasing my intelligence as they go. Most certainly, we're going to get there with AI anyway.
Yeah.
See, I see this as a highly deflationary market. I see the future is really, really positive, man, because you have all of this excess. Whatever, either excess supply or excess too much demand, bad demand. I don't need to run my house at 69 degrees, dude. It's pretty comfortable at 71. In fact, it gets uncomfortable at 69. I have to start putting coats on. So imagine if I had equipment that could monitor all this stuff much, much better than we're doing and also oscillate our usage. To me, that is a very positive future. And all of this excess comes out. Who's it going to hurt? It hurts no one that's efficient.
Yeah.
It hurts no one that's efficient, man. And if it doesn't hurt the people that are efficient, it then ensures that efficiency drives through the entire marketplace. And the guy that is not efficient, he will stand out like a sore thumb and his stock will get crushed. Yeah. So I'm very excited about the future because we have tools. Now, if we try to like slam that old paradigm into this new capability, well, that's not going to work, right? That's like putting a girl into a heavyweight boxing match with Michael Tyson, right? And I don't care how many steroids she's taken, she's going down, right?
Yeah.
So, I mean, how could I be wrong on that? Does that make sense to you? Do you get excited about, oh, wow, that's a good way to frame it?
Yeah. I mean, I love the idea of, of not having the payments, that I do. Like we go out there and we make payments and, I buy with cash when I can. I try to do that more so than not, but with the price of things these days, which I believe is driven up in a great part due to the fact that credit is so easily or has been so easily available, since the GFC, right? Again, we were talking about how how the frackers and horizontal drilling, which is a lot more expensive. I think it gets around $80 a barrel to get that, but it was able to be done during after 2010 to 2020 there, especially 2015, 2020, because there was so much easy money, right? There was so much easy money. The Fed had trouble trying to keep inflation at 2%. Again, we hit 0% there, I believe, right around 2015, and then again around 2019. They were struggling for a decade until the pandemic to even keep it, where they were trying to keep it. They barely ever got it there. It was just 1% and some change usually. So a lot of easy credit, a lot of easy money, put it out there. And so again, what do we know? If there's easy money, if we've got access to easy money, we got a lot more money out there. We're chasing generally the same number of goods. Prices are going to go up. And so for those that have the cash, that's not a big deal because you can go out, you can pay cash. But the fact is, a large swath of the population can't just go out and spend, heaven forbid, at one point, $60,000 for a base level vehicle just a couple of years back, right? So they had to go loans. They had to take out. And now we're talking 84 months, 96 months at $800 or $1,000 a month. It's absolutely stupid. But what was their other choice, right? You need to get back and forth to work. And let's face it, most of our cities around here, most of us want to live outside the city center. And so there's not an easy way, to get back and forth to work unless you have your own vehicle kind of thing, or there's all those different things going in there. So yeah, when we're looking at it, to get to that point would be fantastic, but it's not, like you said, it's not going to be this simple drop-in thing we'll do right now because of the way things are set up at the moment. And so, again, it comes all the way back to, it all plays together, right? Debt-based economies, printing of money, expansion of credit, all these things continue to, to blow into each other to raise prices. So, I mean, it gets to that point that if you are somebody who actually hears this and goes, oh crap, that is what's going on, you absolutely must necessarily then see that you need to buy assets that are going to increase in value. Up until Bitcoin, it was always gold, maybe some paintings, some really odd paintings and whatnot. Now you've got Bitcoin. I had somebody the other day, we had our Beards and Bitcoin show yesterday, and somebody left a comment saying, well, you guys don't get it. A lot of people can't afford Bitcoin, so they go and they buy all the other stuff. I'm like, no, you don't get it. It's not about having to have one Bitcoin. It's having enough Bitcoin in relation to your wealth or your financial level so that you can work against the effects. Yeah, offset the effects of the rising prices and the inflation and everything. That's the goal. And so for a lot of people, it may not be a full Bitcoin. It may be half a Bitcoin, and they don't have to get it all at once. The goal, as you continue to say, is to buy, to increase the number of sats that you over time versus just thinking, oh God, I don't have, $55,000 to buy a Bitcoin today. You don't need $55,000 to buy a Bitcoin today. Do you have $3,000? Buy $3,000 worth of Bitcoin. That's going to do you better if you're thinking in terms of protecting yourself against inflation and rising prices and government printing and creation of credit and all this stuff. If that's what you're looking to do, you absolutely have to buy Bitcoin. Don't spend it on Ethereum or dog, cat, mouse, or whatever the hell the damn meme coin or shit coin of the day is, because you're most likely going to lose your money with that. But if we're talking about preserving wealth, if we're talking about preserving our position in life and potentially getting it better, you have to think first off with, how do I protect myself against what's happening regardless? Prices are going to go up regardless. The Fed's going to print regardless. Credit's going to continue to create regardless. There's going to be times where it comes back, it pulls back. But overall, as everybody likes to point out, the purchasing power of the dollar is down like 98%, in 100 years. And it's going to continue to decrease because of these things. So, maybe the first goal for people should be in recognizing this is what's going on and then going, okay, how do I protect myself against it? Versus the first thing being, how do I go in and, try to make money in the markets to get ahead of it? So you get the thing, you protect yourself first, and then you look to expand. You look to increase your position and make it better. I mean, I think for most people, that would probably be a lot more beneficial, long term.
Yeah, for sure. For sure. What do you think, Sam?
I don't think I have anything to add, right? This is kind of the general, they're going to keep printing money. It's about the reason why you invest in Bitcoin. I think it's about where we see the market going compared to where we are today. I mean, for me, it's just a general takeaway of perspective, right? Like, I'm not in Bitcoin to make money, right? To Chris's point, like every time I'm buying Bitcoin, I'm not like, oh man, I can't wait for this to pump. Like, obviously I would love for it to pump, but I'm of the same mindset where, okay, how can I preserve the wealth that I have? How can I make sure the government's literally not stealing my time by inflating what I trade for time, which is money?
Yeah.
Right. Bitcoin is my time machine, right? It's my time vehicle to make sure that my time is still mine. When you have that mindset,
everything else becomes noise, right? Everything else is just noise.
I locked myself's phone. You know what?
Guys, I've got to handle something real quick. Can you guys either close the room? I've got somebody at my front door.
No, you're good. We're at our hour and 12 mark. Gary, why don't you give them the go ahead, and we'll head out. We'll see everybody tonight at our spaces at 5 p.m.
Yeah, guys. There's a guy at my front door. I'm going to go be really nice to him. And your job is to do something nice for somebody you don't know or somebody you do know, but you can't take credit for it. Okay. Do that. If you don't do it, you got to do 2 of them tomorrow, and you got to admit that you committed a mortal sin. Okay. I'm holding you guys. There's 1,400 people. Imagine if 1,400 people did something nice for a stranger today.
Yep.
All right. See you guys. Ciao.
Thanks, Chris.
Thanks, guys.
Chris, thank you very much, buddy. Sam, thank you.
Appreciate y'all.